Hello, hello, hello. What's going on? There we go. There we go. Now you just don't see me. I had it all set up, and now you don't see me. There we go. Sorry, dealing with a makeshift setup this morning. A very makeshift setup since main streaming computer completely blew up after the stream yesterday. So, how is everyone doing? Going to bring Bob on in a minute. He wants to talk ECB. Good morning, Ken. Good morning. Hello, Waka Waka. ECB 50 basis point rate hike, euro going up versus US dollar. We'll see what Bob has to say. Again, I'm not as well prepared. Was working late to get this and then up at 5:30 to try to get the streaming setup going for everybody. Good morning, Jacob. Good morning, Josh. Good morning, Davey. Good morning, Patrick. Good morning, Wavy. Good morning, Connor. Wow. Good morning, Mickey78. Oil been a slippery, slow pace. Oil has been slippery for slow pace vacation trading. Oil pulling back. Now you see me, now you don't. Yeah, it's a big magic trick. Disappearing Mike. Hello, Optus 22. Good morning, Eric. Why is ECB interest rate decision bullish for NASDAQ? Well, let's get Bob. Hold on. Let's see if this works. Oh, it does. By the way, if you are new here, please do consider subscribing, hitting the like button, and ringing the bell. Longer term subscribers, please come back and leave some comments. Let's see if the guest. There we go. Bob, you are on. Can we
I'm
hear
here.
Bob?
Yeah, I'm here. I'm
All
just still
right.
watching the Lagarde press conference.
We can hear Bob. Let's see if I have to adjust something. Can everybody hear Bob okay?
You can hear me, right?
Yeah. All right.
What's it
So
doing?
you can start whenever you want. I'm going to turn up your volume a bit. Go ahead, Bob.
No, I'm laughing because I'm watching the ECB press conference on my other screen over here. And Lagarde just basically said that the TPI allowed for a larger rate hike. So for those of you that are just watching whether they hiked or didn't hike, they've created something called the Transmission Protection Instrument. Uh, and it's theoretically an instrument that will protect the transmission of money. Okay. That's where they get the title, I guess. What it really is yield curve control, which is something, if you pay attention to yields, has been a concern of a lot of market participants. The Japanese, the Bank of Japan, has engaged in yield curve control for quite some time now, and it has absolutely crushed the currency. Now, it's interesting because you see that if you look at the Japanese yen chart, which we don't have to do, I don't care, but if you look at the Japanese yen chart, you see the absolute precipitous drop that has happened this year. You'll be looking at the start of yield curve protection, okay, with yield curve control, I should say. It's affectionately known in the financial literature as YCC, yield curve control. And that's when the currency started really falling out of bed to levels we hadn't seen in quite some time. The ECB rallied, I'm sorry, the euro currency rallied on this announcement of 50 basis point rate hike. But 2 days ago, the euro futures high was 103.15 and a half. Today, the high is 103.20. Certainly not something I'd call a resounding fear of a 50 basis point rate hike. And that is because of the transmission protection instrument. So what it basically means is, and there's no limit to the transmission protection instrument. The way they're describing it so far, I'd hope to have more information by the time the stream start, which is why I reached out to Mike and said I wanted to talk about it. But there's not a ton of details on it just yet. But what it basically is, it allows them to buy and sell bonds to control where the yields are on the longer end of the curve. If you know anything about central banks, and if I use trader speak, feel free to throw a question. And when I talk about the yield curve, if you plot the yield of all the maturities of the bonds, so let's take the US for example, 2-year, 3-year, 5-year, 7-year, 10-year, 20-year, 30-year, it creates a curve. of yields, right? I want to get this in the box there. Curve of yields. And that's called the yield curve. So when you talk about further out the curve, you're talking about longer dated interest rate securities. So a 10-year would be further out the curve than a 2-year would. Okay, just so you understand what I'm talking about. So I'm sure a lot of you already did. So what the ECB has allowed themselves to do, because central banks only control the very short end of the yield curve. They set rates at the overnight level and usually out a couple days, and that's it. In the US, it's the overnight rate and the Fed funds rate. And those are very, very short term, 24 hours to 3 days. The central banks have no control of longer interest rates. And we're seeing what happens when you don't control the yield curve in the US. You get an inverted curve because the interest rate market expects a recession, or either way, they expect inflation to be significantly lower 5-year, 10-year, 20-year, and 30 years from now. So what the ECB has done is allowed themselves to control all aspects of the curve. This is the height of yield manipulation, and will likely over time devalue the euro further once we get details and once they start to use the TPI. So once they actually start to use the TPI, the effect will be a sell-off of the euro in the same way that it was the yen. And I have one very pessimistic friend that said our central bank will be doing the same so that they can control the short end of the curve with rate changes, and they can control the long end of the curve with yield curve control. Yeah, so that's really what I wanted to talk about. Don't ignore what happens to the euro currency in the next few days, or I should say the next few weeks, because it's really going to be very significant when you look at the longer end of the European yield curve, like boons and baubles and gilts, which is in the UK. Baubles are in France. If you look at those yields and you start to see those yields fall precipitously, the ECB may intervene. If they start to rise precipitously, the ECB may intervene. And that is likely to result in the euro being sold off. So I don't know if that matters to you guys. Now I see Coco says, why ECB interest rate decision is bullish for NASDAQ. It really isn't directly bullish for NASDAQ, Coco. It's just the initial reaction of the market is sometimes position squaring. So you got to watch over a couple of days. If it became bullish for the NASDAQ over a day or so, I would say it's basically because people are expecting yields to fall on the longer end in the European Union as well, like they did here in the US. When the Fed started raising short-term rates, longer-term rates started to fall, and lower yields is good for tech overall. So tech is global. So if rates go down across the globe, that's generally going to be good for tech. That's about it. Anybody got any questions for me, or I will jump and leave Mike to it?
Oh, you just keep talking, Bob. I'm so far behind.
Mike is using this time.
Like literally. This is No, I got a question, Bob, because we had some numbers come out today.
Oh, awful numbers.
Continuing jobless claims were up pretty substantially. Initial jobless claims were up. Philadelphia Manufacturing Index was a disaster.
Yeah. Initial jobless claims was the worst since November. Okay. And let me just look this up really quick because I've been keeping track of this weekly. I think it's the 6th or 7th week in a row where jobless claims were worse than estimates. So let me look at this real quick. Again, I think I mentioned this to you guys before. Investing.com keeps a really easy to navigate list of historical economic data, really the basic stuff. So if I look up weekly jobless claims, if I go to Google or DuckDuckGo, and I put weekly claims investing.com, it lists some, it's like one of the first things that pops up. Now I can't find it now that I spoke. U.S. I just put weekly claims. That's why weekly jobless claims. And there it is. United States initial jobless claims investing.com. And what it does is, if Mike were fully functional this morning, I'd have him put it up. So what it does is it lists the actual number in either red or green. And if it's red, it means it missed estimates. If it's green, it means it's exceeded estimates. And it adjusts to what's good or bad. So in jobless claims, a lower number would be good, a higher number would be bad. 1, 2, 3, 4, 5, 6, 7 consecutive weeks where the jobless claims number was worse than the market expected. So from that, and by the way, I'm looking right now, it's not only 7 in a row, but it's 10 of the last 12 at least. Yeah, it's 10 of the last 12 where jobless claims was worse than expected. Now you can have worsening jobless claims without having a recession, but we've never had a recession without worsening jobless claims. So the jobless claims numbers are the one I'm focused on there. Horrendous. Philly Fed Index, yeah, important. Not a very big region, but still, it's a Fed index. So it goes into their calculations of what to do next. I'm telling you, as this data gets worse and worse, people are going to think more and more that the Fed is going to pause. I mean, you saw the CME Fed Watch tool this morning. The excuse me, the 75 basis point rate hike is now what, 67%?
Let's see. I'm refreshing right now. Hopefully, it will work. 69%.
Okay, so the 100 is basically off the table now. It's off the table. Rich is pointing out that the euro is pulling back. That's likely because she's explaining more about the TPI. That's my guess.
Yeah, it is. Wow.
Yeah, it's the TPI that's doing that. Because again, the TPI
Whoa.
is yield curve control. This is going to be bad for the euro. My target for this fundamentally is 95 for the euro USD.
Wow.
Now they haven't done anything yet, so people might come in and buy parity and say, you know what, they haven't done anything yet, so who knows if they're ever going to use it. But you don't create this tool to not use it.
You don't create it to not you. Well, I agree with that statement.
If everything looks like you can't control the yield curve, then everything's a hammer or something like that. I don't remember what the saying is.
Well, the next major harmonic would be 96.62.
All right, I'm changing my target to 96.62.
Yeah, that's the next target area. Let's just put it that way. And
Yeah.
that's from the highs. Actually, let me revise that. You might be closer. I'm going from the major highs back from the 6th of January. Hold on. I added on the wrong hot. Let me just really get the 96.52. So we're right in the mid 96s. So that's very interesting to see if, once parity breaks again, that will be super interesting to see. And then minor levels 98, 50, 97, 40, 40. All right, so we now have a roadmap. There we go.
Mm-hmm.
Details of TPR described in a separate press release to be published at 15:45 CET. So we shall see.
Yeah,
All right. What's oil doing now? Somebody said oil because oil pulled back bigly.
96 last I saw.
Oil pulled back bigly after hitting the stop reduction target in the, but bouncing off the 62.5 harmonic, which we need a close below to invalidate that little double. So bouncing right off that levels. All right. Thank you, Bob. Let me get back.
All right,
to
guys, I'll
hitting a
talk to you
couple
this
key
afternoon.
levels.
Today, again, is the day that I might be late, so you guys know. So Mike, just get started, and I'll be on when I can.
As long as Mike's jerry rigged streaming rig holds up.
All right, guys, I'll
All right,
see you later.
Thanks. Bye. Hey, I'm back. Only one camera mic now. Thanks for putting up with this, but when your whole major streaming setup blows up with a big kaput, it's, again, I did a test stream like at nine something last night for like 2 minutes, and I forgot to delete it off one of the channels and off Twitter. It was a rough night. So let's see where we sit. Bob is always busy. All right. What are we watching for? Let's just get through some markets real quick. We got 10 minutes. Minor breakdown level in the S&P is this 3950 again, and that's also a psychological number. Major for getting into that clear path. Here you see this little support ledge with the candles. You start breaking down 3928. Start watching for the retracement into the clear path. This is sort of a toppy pattern up here. Some people might trade it as a topping pattern. I'm just would be watching the breakdown pattern. Then 3905 to 3900 would be the next targets. And then the full target, if we do put in the bigger sell-off, is 3838. Keep in mind, cycles on the daily top, but not yet rolling over. But this would possibly start the rollover move. For the bullish case, again, that's pretty easy on a breakout. You start breaking up above this 39.75 level, above 39.75, major cluster 39.92 area, 39.90, 39.89, 39.92, then 4,027, which you have a declining major trend line, you have this top of this channel, and you have a harmonic right there. So that's your bull and bear case for that. I'm not going to cover every market today since we heard from Bob. NASDAQ, you see here, running up with the next harmonic, this 12,560 area, bouncing off that right now. The breakdown zone, the minor breakdown zone I'll go over would be below about 12,400. And then we could get some acceleration below 12,350, but don't get into the clear path. There's some decent stopping points, 12,263 and then 12,163. So those are all the stopping points below. Rotation back up 12,610 on the upside. And then what do we have if it were to blow through there? You really have to go to the end of the clear path move. The technical end of the clear path move is right there, 12,680. And then above there, it would be 12,892. Not expecting that today. Going to skip over that. Crude, again, your key line in the sand on a closing basis is about this 94.70, bouncing off that level still. So stop still in place on that after the substantial pullback. Natty gas, I already talked about that 62.5 hitting yesterday inside bar. So I'll just keep this on the chart, but I'm not going for... Again, it could get higher prices, but these doubles essentially completed from my point of view. Take a look at gold some other time. VIX. Does anybody have the current VIX? Right now, my delayed has a 23.77. I only get concerned about the bigger sell-off if we start getting really above 24.25. Then I'll start watching for that. Bitcoin could not really get the close above the channel yesterday and pulling back in. So I'm now watching for the major support level, especially if the NASDAQ rolls over, to see how it starts reacting about 21,618. Tesla had earnings yesterday. That earnings report, what a disaster. I don't know how anybody signs off on this stuff, because if this ever gets a real government audit, it's going to be very interesting. But pre-market gap up. Your key support now is 750 to about 752, and then the gap fill, if it does roll over, we break through 771, the target 794. Where else do we sit? Oh boy. Lots of junk. And by the way, you still have to lean on the bullish side until the VIX really rolls over, or even if you get a pullback day, we have to check the symbols. Snap. This is just another example. By the way, Snap's earnings are today, so that's, this could be interesting, especially if they miss and gap back down. But on a beat, the next target would be, because you're into this gap level, the next target to the upside I'd be using is 1427. Let me look at the Qs real quick again. I don't know if I'm going to get to all these stocks today. The Qs trading right here. We have to use the minor we don't even have a decent pausing bar. We have a potential little double on the Qs. Keep that in mind if we do break down into the open. If we do break down, the targets are 20, 298.44, 297.60, and 296.51. To the upside, this is where we just got to use the minor harmonics from this little swing. This will give us an idea because we don't have a strong pausing bar yet, but on a big 307.28, but I'm really focused on this 308.86. Let me see something. If we go all the way back here, yeah, just use these ones. Discard that. I'm just using because it's into this clear path move. There's a minor breakdown zone. There's a couple minor breakdown zones, but the major target on a continued rally would be about 308 to 308.50 to 309. Let me cover that later. Options 22, but that's roughly correct. Yes. Where do we sit? Thanks. The 20. Yeah, so the VIX, yeah, really watch if it starts rallying back above 24, 24, 25. Oh, is Jimmy bullish on Tesla? I mean, this is the earnings report was such a joke, but Tesla will do what it's going to do. Will SPY close the gap? Again, how is the quality on this live stream? Did not get to test everything. How's the volume and everything? SPY to the downside, yes. Once we get the next rollover, it'll fill the gap. If that's the gap you're talking about, to the downside, I don't think it'll fill it today. Off the open, you start breaking below 392.42, 390.50, 389.63, 389.50, which takes it to this key breakout level. And the gap you're referring to, when it does eventually fill, would be a full close down to 382. Don't, unless we get something really bad out today or something breaks, not expecting that to happen. Let's just check in. Again, there's nothing else besides the CB leading index at 9, unless that's a huge miss. But if it's a huge miss, is that a rally? Because the people can then say the Fed's going to pause sooner. So again, it's just really trading tactically. Really, Balaji, I'm going to have to look at some of these after this afternoon on the stream. By the way, Netflix hit we hit that full double target, closed above the 62.5. So the next targets on that are 182.57 and then 189.32. That's your targets there. Amazon also with the close above the 62.5 and the close above the 75, which was the next target. So your next major target on there is 125.74. Pullback area would be 119. Netflix, the minor target 218.20. Next major one is 221, which is pretty substantial right there on a pullback level. You're looking at your support coming in about 207 and your minor support coming in about 213. All right. Let's see. All right. Good quality. Thank you. Volume great. Can you do XLF, please? Really? Oh, crap. I don't have I can look at it real quick here. XLF, again, your only thing is if you close on the daily above 32.87. Right there on your pullback levels. Again, I haven't transferred everything over to this other computer. Your minor pullback would be about 32.50, major pullback 32.18 to 32.23. You have a fair amount of overhead resistance here. Pre-market down a little, but the real thing you're watching if for a continued bullish case for FLX is a close above 32.87. All right, you are welcome. Are you talking about the which report? The Tesla report? Look, start peeling behind the scenes and look at accounts receivable, accounts payable, cash flow, and everything else. It was a really jerry rigged report, but it's going to be interesting when the 10Q comes out. So with that, I'm going to wrap it up. I got 1 minute and I'm all over the place with still trying to get stuff set up. So talk to everyone after the close. I won't be able to come on at launch even if something happens because I will be dealing with the streaming computer blow up. Talk to everyone later. Bye.